Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Amy Wu Silverman, RBC, joins us this morning. Amy, what do the derivatives, variance, kurtosis, the rest of it, what's the character, the nature of this bull market when you look at the cross moments?
Hey, good morning, guys. So, one thing I've been analogizing this to is right now the airplane may have stabilized or we're at a steady altitude, but everyone still remembers the turbulence. We might still have our seatbelts on. We probably have our eyes closed. And that's a little bit the positioning we're seeing in the derivatives market. So, your headline VIX is normalized a lot. But all those secondary moments that you talk about, your skew, your volatility of vol, those are still pretty high and for good reason. Institutional memory is short and we still remember what happened a few weeks ago.
Are we under-owned tech into Nvidia? Folks, Ed Ludlow, a special tomorrow in the 6 o'clock evening hour with Mr. Wang from Nvidia. Amy Wu Silverman, are we under-owned on tech or is tech over-owned?
Look, from a positioning perspective, it feels like a lot of people have already jumped in the pool. The reason I say that is when you looked at historical positioning in every earnings except this one for Nvidia, it was very, very long, that call skew. People really needed to jump in, so they're holding that right tail in the options market to do so. You don't see that this time around. It's much more even. So, people aren't overly bearish, but they're also not overly bullish. And to me, that not being overly bullish is very, very different than past, I'd say, 6 to 8 quarters, ever since we got that May 2023 blowout number.
Damien, Goldman Sachs making a huge deal about this, that a lot of the, I don't know, I'm going to say as a generalization, hedge funds they're not piled into Nvidia right now.
Well, you know what I mean, Tom, and Amy, you can help me with this. I'm not really so concerned whether or not the skew on Nvidia is platy or leptokurtotic. What I'm really more concerned with is real demand for hedging. It's taken me, for months, for months, I've been talking to people about cost for protection is cheap. You should be hedging here. Equity markets at all-time highs. Nobody would take my call. Nobody would talk to me. What are you hearing now from investors?
Yeah, welcome to my life. You're exactly right. People don't want to hear about it when realized vol is hitting 8 and VIX is kind of just floating along. But it usually takes some sort of drawdown in the market to remind people why you hedge in the first place. I will tell you those calls are picking up. And I will tell you that the cost of protection on a historical basis is still relatively inexpensive. Sure, is it more expensive than it was 3 weeks ago? Absolutely. But on a kind of longer tail basis, it's still relatively attractive, and you can structure ways to carry that cost.
Across the nation and worldwide, just to help you out with the jargon of young Sassower, his golf game right now is leptokurtotic. So that's where he got that phrase from. Damien, please.
Amy, we got to ask you about this. I know that Nvidia earnings, the option markets are pricing in a big move here. What other events over the next, let's say, 30 days are really pricing in big moves if you look at overnight option markets? Obviously, you have NFP on the 6th of September, but, after that, we've got some Fed meetings, we've got CPI. What about BOJ? What about BOE, ECB? Do you see any other central banks moving markets?
Not nearly as much as, that NFP you mentioned, and obviously the Fed. I will tell you, September tends to be a conference season. So, everyone's kind of back into the office. There's a lot of single name conferences that come up and industry conferences. And that usually tends to kind of surprise people. So you get some sort of fundamental idiosyncratic information that comes out of those. Those are usually kind of underpriced. And those are some things we watch for in September.
Amy, is there any science here that cash is moving? Rates have come in a little bit off the Powell speech, but does RBC see cash moving to new places?
So, in some ways, Tom, it's still the same old story, but I think there's going to be new themes. Obviously, one is just what we're doing and seeing in terms of small mid-cap value versus growth. You get that flight to safety back to the mega cap tech names when you have those drawdowns. But one thing that I think investors have been itching to do, we just haven't quite got there, is to go back into these wider breadth names. And when you see that call skew pick up, it's usually a forward indicator that those kind of themes are starting to move again.
I just want to ask you one last question, Amy. I mean, it's gotten increasingly difficult for hedge funds or, anybody who's graded on a mark-to-market basis, to find a free lunch in this market. It used to be the basis trade, then it was the FX carry trade. Talk to us about the impact of U.S. rest of world rate compression. Do you see that impacting equities here?
Yeah, to some degree, it has a little bit already. But I think, what's interesting to me is when you got that major drawdown a few weeks ago, it really shook all these carry trades a little, right? But in our space, in equity volatility space, we actually saw some folks double down. So when you ask about a free lunch, people are still betting on that to some degree. I think that's absolutely fascinating, So maybe that doesn't work as much in FX anymore,
right.
But you still people kind of, they're still saying like, we think that exists in the equity vol premium space and we're still going to try it for the months to come.
Amy Wu Silverman, thank you so much. RBC Capital. Now at Nvidia, actually not a pontificator, but somebody that actually knows what they're talking about. Walmart at the bottom of the income statement makes 3 cents on the dollar. Nvidia at the bottom of the income statement makes 55 cents on the dollar. Can they sustain 55 cents on the dollar at the bottom of the income statement?
I think they can, at least for the next 2 years. It's very hard to look at the landscape beyond that, given how fast this space is moving. But clearly, they have the product lead to do that.
Mandeep Singh with us from Bloomberg Intelligence. So just simply, these chips, these things they sell that we don't understand, do they depreciate? Do they become obsolescent? What's the Nvidia advantage to what happens to these chips once they sell them?
They do depreciate. And think of, your old PCs. I mean, they're still around. They're not as useful as the new ones, but you can still use them for some sort of computation. It's the same way with NVIDIA GPUs, albeit they're much larger in terms of, the compute capacity. They are sitting in a data center. And they do depreciate, but the usefulness will last for at least, good 8 to 10 years. And that's where, companies that are pulling together all these giant data centers with clusters of GPUs, they have an advantage because large language models are all about scaling. The next model is going to be 10 times bigger, GPT-5, same thing with Llama 4, and you need more compute capacity. And the only company that can provide it right now is NVIDIA. The Intel CPUs or the AMD gear just doesn't work when it comes to doing this in parallel computing.
Mandeep, revenue, gross margin, EPS. Which data point is going to be most watched by the markets as Nvidia releases? And when I look at it, actually, I look at margins. I look at the H20. I look at the China-specific AI accelerator of Nvidia. And I know a lot of people are focused on that. They're focused on Blackwell shipments, whatever that is. Talk to us about what the smart analysts on the street are looking for tonight when Nvidia releases.
I would say more revenue and gross margin, and in that order, simply because right now they're under shipping demand. I mean, NVIDIA has, and it's by a lot. That's why you see it in their pricing. That's why gross margins are going up. But we haven't reached that point where the market supply has caught up with the demand. And it'll be the case tonight as well.
Ed Ludlow, tomorrow night, a special 1 hour Bloomberg Technology on this juggernaut. What is your Mandeep Singh question to Jensen?
Well, so I want to hear from Jensen how he looks at the scaling laws for these large language models. I mean, in the end, this wave is going to have some sort of a capex digestion, even though it's a long tail when it comes to this capex investments that we'll see with generative AI. There will be a digestion phase. So what I want to know from Jensen is what is he seeing in terms of scaling of these large language models, and when will we see a pause in terms of evaluating the ROI on the investments that companies are making?
Remind me where the money is in AI? I went out on Twitter. They have this Grok thing, and I searched my name, and it was hilarious what came up. What is the actual use of AI that Mandeep Singh sees?
I mean, right now, if you talk to a developer, they would rave about how much productivity Gen AI has added to their workflow. And it's just doing simple things, simple searches that people were doing on Google before. The Copilot brings it inside whatever editor that they are working. So it's more about an assistant that can do simple tasks. Like for an analyst, it's like having an associate who can do basic searches, basic data gathering. And that's quite powerful because it saves you so much time. So we're not talking about high-end, computation that will change the world. No, it's about doing simple tasks in a way where it drives more productivity. And we are seeing a lot of instances of that.
Mandeep, since August the 7th, when Nvidia stock kind of, found its base there, the market cap was $2.4 trillion. Today, just a few weeks later, it's $3.1 trillion. That's a $750 billion gain in terms of market cap. I mean, it's hard to wrap your head around a number like that. I mean, when the market came off, when Nvidia stock came off, did a lot of people lose money? Do they have short-term memory loss? I mean, how can it snap back so quickly? I mean, $750 billion, that's mega millions on steroids, Tom. I mean, how do you quantify that?
That just goes to show what kind of an investor base they have.
Yeah.
And if I was Jensen, these are not the kind of investors I want to have because I want, investors who will be part of the long-term story. And we know the long-term story is quite strong when it comes to Nvidia and generative AI. But clearly there are people who are trading this stock, and that's where you see a 40% round trip for no reason.
Do they have any Apple characteristics of use of cash, of perchance dividend growth, or even with all that cash coming in 55 cents in the dollar, share buyback?
Probably a buyback could happen, but they just did a stock split. So, I find it hard to believe that they will be buying back their stock at this phase when they are still growing, 40, 50%. The growth rates will taper in the second half next year. But clearly a high growth company like Nvidia, they have so much room to invest. They'll probably be looking for some acquisitions.
September 9, Apple out with a new toy. Your opinion of the impact of September 9 on Apple's future?
It's huge because when we talk about deploying generative AI, the number one real estate is your phone. And Apple just has to capitalize on doing that. They don't have their own large language model, but they own the distribution when it comes to, the smartphone base that they have. And that's where, deploying Gen AI on phone is a lot more powerful than deploying Gen AI on the cloud. And I think Apple can show that on September 9th.
Damien, get one more.
Mandeep, where are we in the semi-cycle? I mean, seriously, we saw a lot of stockpiling of semiconductor chips after COVID, after the pandemic, by China and, the sanctions, obviously, due to the trade war. So a lot of noise there. I'm curious where you believe we are in the semiconductor cycle.
I pay a lot of attention to the lead times. When the lead times start to compress in semiconductors, that's when you are closer to an end. Right now, the lead times aren't compressing. Even though TSMC is expanding capacity, the lead times are still growing. In fact, there are delays of producing Blackwell. So we don't have that in sight yet.
Brilliant. Mandeep, thank you so much. Mandeep Singh there on Nvidia. Ed Yardeni joins us, Yardeni Research. Ed, you have a lonely call. If you go out, not 18 months, but 17 months, 16 months, who's counting? You have an interpolated extrapolation of the SPX to Dow 50,106, which is up 21.5% out 16 months. How lonely do you feel? How lonely is your bullishness on our stock market?
Certainly more people that are optimistic about the outlook for the economy than there were back in 2022 and early 2022. And through 2023, we were pretty lonely with the idea that there wouldn't be a recession. And that was definitely a contrary call because, look, it was logical to expect that with the Fed raising interest rates from a Fed funds rate of 0 to 5.25%, that kind of tightening would cause a recession. We argued that we were in rolling recessions that were impacting the various sectors of the economy without taking us down. And we argued that the consumer was fundamentally resilient, that this idea that they'd run out of excess savings missed the point that there were, 70 million baby boomers with $75 trillion of retirement assets, and they're retiring.
I mean, I got up 128% from the pandemic low here. When we get to Dow 50,000, again, this is off 66,000 something. Ed Yardeni's most optimistic call for 2026. Tell us your confidence in your x-axis, the ability to have pullbacks like we saw in early August, or just the confidence of out 6 months, out 1 year, out 14 months.
Well, I think the market has demonstrated not only that it's a bull market, but it's a very supercharged bull market. And I think what's supercharging that is there's still a tremendous amount of liquidity in the financial system. The increase in interest rates encouraged a lot of people to pile into money market mutual funds. So we have a record $6 trillion in money market mutual funds, and $2.5 trillion of that is retail. And as the Fed lowers interest rates, that money, some of that money, will pour into the stock market and into the bond market. So, every time the market goes down, look at what happened in early August. The market had a panic attack. It didn't last very long, and we basically did a bungee jump, and we just rebounded completely.
Damian Sassower, if you get an Ed Yardeni end of 26 call, which interpolates over to Dow 50,000 as our talking point, that's 13.4% per year from the pandemic bottom, when you were the only one I know that wasn't 100% in cash.
Ed Yardeni, you wrote the book on central bank balance sheet finance. I mean, I've been reading your work on this for many, many years. It really has helped me kind of be a better analyst myself. I'm looking at this combined central bank balance sheets of the Fed, the ECB, the BOJ, and the PBOC right now, 25.7 trillion in assets, well off the high of 31 trillion we saw, back in 2022. At what point does the ship stop? I mean, I know these balance sheets are still relatively large as a percentage of GDP, but what are your thoughts here? I mean, at what point does something snap?
Well, there's been a lot of talk. I've been doing this for over 40 years, and can't tell you how many times people have said this is going to end badly. and I don't recall people using the expression, when is it going to snap? But I think that's the same thing as when will it end badly? And so far, occasionally we've had corrections. Occasionally we've had bear markets. Occasionally we've had recessions. These things really don't happen that often.
That's right.
And we get past them. And anybody who was smart enough to get out at the top in the stock market probably wasn't smart enough to get in at the bottom. I mean, it's a tricky thing to get the tops and the bottoms. And I'm sort of in the Professor Siegel camp, the Warren Buffett camp, that says you really got to stay in the market. I think where I've brought some value is I've been pretty good at picking bottoms, still working on tops.
Well, let me review that. October, there's been 2 October lows, 22 and 23. I call the 22 low the Yardeni and Kapoor low. Between their combined ages, they go back to George Washington. And Ed Yardeni and Ralph Kapoor, completely different, both said, shut up and buy, October of 22.
And Ralph Kapoor is chief market technical guy. I mean, for anyone who doesn't know out there. But I'll say this, what you called my attention to some years ago, Ed, is when you look at the 4 big central banks, I'm talking the PBOC, not the Bank of England here. If you combine their balance sheets back in 2018, 2019, when they started to taper and, the growth in those balance sheets combined started to decline, we saw a hard landing. We saw a really painful event back then at the end of 2019 into 2020. Now we've been seeing the same thing, but it's been going on since the middle of 2022. I mean, so nothing is broken this time, to your point, but how much further can we go on with the global money supply contracting at this pace?
Well, I think when you look at the central banks, and I'm looking at the Fed, the Bank of Japan, the ECB, as the 3 main central banks that I combine the assets of, the pessimists during the bull market that came after the great financial crisis, the pessimists were showing a chart of the combined assets of the central banks versus the S&P 500 and said, oh, look, the only thing that's really driving this bull market is all this liquidity. And, a couple of years ago, they started to retrench on their quantitative easing. Some of them they've been doing quantitative tightening. and yet here we are at a record high in the equal weighted S&P 500, and we're almost at a record high in the S&P 500.
Right.
So there's a lot going on here. It's not all about central banks. It's also about people working hard in companies and generating earnings, and earnings driving the market higher.
Tossing a bit of dollar weakness too.
Yardeni to Dow 50,000 end of 26 off the Lehman low, up 593%, 11.5% per year on the Dow Jones Industrial Average. Ed Yardeni, I got a really difficult question here, and I got very strong feelings about this. Damien mentions the fossilness of Ed Yardeni. It used to be Robert Stovall on the floor of the New York Stock Exchange. There was a girl named Maria who was the money honey that invented the clothes. I mean, Maria single-handedly. Good morning to Maria. I don't know where she is. She takes the
Robert and Sam, are they related? Robert's son?
Yeah, Sam is Robert's son.
Really?
But Maria takes the whole month of August off. She's that huge. But anyways, Maria's out there doing her thing. Ed Yardeni's on Wall Street Week with Lou Rukeyser, and that was your total financial coverage. You read Barron's every Saturday morning. You sat there and read Barron's. And what is Mario Gabelli doing? Ed Yardeni, how do we remain bullish in the financial media, modern social media frenzy of 2024?
Well, I think the pessimism comes mostly from people who are focusing on the biggest picture of macroeconomic policy. Washington gets a lot of weight in their calculations, and I agree. It's hard to put much lipstick on that pig in Washington, certainly on the fiscal side, and on the monetary side. I think they've done it pretty well so far. But I am kind of critical of the Fed turning too dovish on Friday when Powell gave his speech at Jackson Hole. But I think what the pessimism misses is the strength of and resilience of the U.S. economy. It's the most powerful economy in the world. It's highly diversified. Nobody does technology better than we do. Maybe the Chinese are second, but many of their technologies they basically ripped off from us. But clearly, we're in the forefront of technology in the industrial sector. We're getting better and better now that we're doing onshoring. The financial sector is amazing. Nobody's got consumers like we do. When our consumers are happy, they spend. When they're depressed, they spend even more. And so I think real GDP is at an all-time record high. Real consumption per household is at an all-time record high. All this talk about only a few people prospering, just it can't work. An economy can't work when only a few people prosper, and you can't have record real GDP without a lot of people prospering, and that's what we're seeing.
Ed Yardeni, Damien Sassar is all fired up for some global dollar questions. Let me get this in here before Damien takes off. To me, Ed, I rarely do this, folks, but in my optimism of the American experiment, to me, it is productivity. Productivity is a 3-ratio function, keeping it simplistically. I've got capital dynamics, labor dynamics, and Mr. Solo's total factor productivity. All of this work is off Chad Jones. Now I think out at Stanford. Ed Yardeni, talk about our productivity, our complete mystery of it, and when we're going to finally realize we're different.
Well, a great rebound in terms of the growth rate. It was 2.9% on a year-over-year basis last year. And the trend average has been around 2.1%. I think we're heading towards 3.5% to 4.5% by the end of the decade. And I think that's what's driving my roaring 2020 scenario. It's my base case. It's not the only scenario that could unfold, but I give it a 60% probability. And I think, again, what pessimists tend to ignore and miss is that technology solves a lot of our problems. And our biggest problem right now on a global basis is a shortage of relatively young workers. We've seen kind of geriatric demographic profiles around the world as fertility rates have gone down and people have aged. And that labor shortage, particularly skilled young workers, is forcing companies to augment the productivity of workers with technology. And we've really never had so much technology available that's so powerful that as we do today. And by the way, that the technology we have is no longer just about brawn, about making things faster, carrying them faster. It's increasingly about the brain. The brain technologies, the ones that make us smarter, are really taking off here. So I think when you put it all together, I'm looking for a productivity growth boom this decade, the roaring 2020s decade. And I think it's already started. And I think it actually started in 2015 when productivity growth was 0.5% on a 20-quarter annualized trailing basis. And now we're already at almost 2%.
Right. Ed, I have to ask you this. I mean, I consider both of us to be card counters. We focus on central bank balance sheets. We focus on money supply. These are key inputs for our analysis, for a view of the market. But there's a huge gray market out there. There's shadow banks. There's offshore money. There's crypto. There's China, North Korea, Russia, India. How do you account for that when you're trying to, count cards and bean count the world and money and liquidity? I mean, how do you look at that?
Mm-hmm. Well, again, I think we've all learned there's a lot of moving parts in inflation. There's a lot of moving parts in forecasting the economy, the consumer, and so on. So it's really one of the moving parts. I certainly try as much as I can not to ignore the global perspective when I try to forecast what's going on in the U.S. As a matter of fact, one of the reasons we predicted that there would be no recession in the U.S. And that inflation would still come down is we saw what everybody else was saying but wasn't connecting the dots. And that is there's a recession in China. There's a depression in the property market. And they've been exporting deflation to the world. And so we see that's been a big contributor in bringing down inflation rates. With regards to currencies, we remain positive on the dollar. It's there's still a very strong uptrend that started in 2010. I think the U.S. came out of the great financial crisis in better shape and is restructured in better shape than anybody else in the world. And so we continue to overweight what we call the stay-home portfolio versus the go global portfolio.
Torsten Slack emails in and says, good morning to Dr. Yardeni. Torsten Slack at Apollo Global Management. I look at Yardeni, at the great gloom that's out there. And I'll say every Friday afternoon, the gloom reappears and all that. Mm-hmm. It's timeless. It's ageless. Yes. Ed, you and I and my mother remember Joe Granville. I mean, just as one example, it's always there. Speak, Ed Yardeni, to people that struggle to have a growth optimism, that literally almost like New Testament, Old Testament, are back at a time where there wasn't the dynamics of the American economy. Speak to those cautious right now.
Well, I think you were right to bring up the topic of productivity because productivity is fairy dust. It makes everything better. It's a win-win-win situation. With better than expected productivity, you get better than expected real economic growth, which I think we're seeing. With better than expected productivity, you get lower than expected inflation. I mean, it's still not widely recognized that the reason inflation has come down so dramatically and so sharply is because unit labor cost inflation is down to 0.5% on a year-over-year basis, and that's the underlying inflation rate. And that's because productivity has really made a tremendous comeback. Productivity allows wages to rise faster than prices, which has been actually occurring for over a year now, to the benefit mostly of lower wage workers, believe it or not. And then finally, better productivity is great for corporate profit margins, which we think is going to go to a new record high in 2025 and beyond. So you put it all together, and I think the key is to look at technology-led productivity growth boom, which I think has already started and will continue.
Ed, generous of you to spend this half hour with us. Edward Yardeni there on a call. And I remind you that out to the end of 2026, his SPX 6,000 plus call goes out to a Dow of 50,000. The only one I know in the company that pronounces Sceneridge correctly like Damian Sassa is Will Kennedy, joining us now from Queen Victoria Street. Will Kennedy, executive editor for everything known to commodities and energy. Will, what price per barrel Brent does Saudi Arabia want? I've lost track of that.
I think it's an excellent question. They probably to be higher than it is today, but I think that they are going to have to think quite strategically over the coming months and into next year about how they get it there, because they have challenges in managing the market right now, and they have some decisions to make about how they want to do that. We're in a transition period right now, and you've seen this from some of the coverage from us and elsewhere. We've had a tight summer in the oil markets. Things have been thin on the ground, lots of good demand from people driving and flying, but people see it changing, and especially next year as we get into 2025, there's increasing concern that the market will be oversupplied. That's partly down to OPEC putting more oil into the market, but it's also down to indifferent demand in some parts of the world and strong supply from elsewhere. So how Saudi Arabia responds to that, well, that's going to be the most important question during the rest of this year.
Well, I haven't been to Tripoli in quite some time, but you got to help me out here. Why are we so concerned about Libya again? What is going on the ground, and what's the impact on oil prices?
Well, Libya has been relatively stable in the last few years. We're getting about 1 million barrels a day out of Libya. The politics remain complicated, but everyone had found a working solution to keep the oil going, despite the tensions between the government in Tripoli and the powers in the eastern part of the country in Benghazi. Now, that seems to be falling down, the tensions seem to be rising, and in the east they control most of the oil export terminals. So they are using oil as leverage in their battle with the central government in Tripoli, and it is clearly having an impact on markets. For all that I said that people are worried about oversupply, over the last few days, clearly that threat to what is more than 1 million barrels a day of supply has rattled traders, and we saw a jump up. So I think it's a reminder that despite the overall balances looking a little looser than they have been, that the market also is at the mercy to geopolitical events across the Middle East, and those haven't gone away.
Well, Will, I mean, just today, Goldman Sachs sees Brent averaging $77 a barrel in 2025. Citigroup seeing, basically risks to their outlook and seeing a lower price for oil. But, I want to shift to gas here. I want to shift to Russia. I want to shift to the Arctic LNG 2, right? Russia's new gas terminal. It started production, I believe. What is the impact on gas? What is the impact on gas markets globally from that? There's been word that, there are, tankers that are, offloading and then, doing all sorts of stuff in the Mediterranean Sea, and talk to us a little bit about what, if any, impact that's going to have on energy prices going forward.
Well, global gas markets remain fairly tight. There's plenty of demand for LNG, and going into the winter, I think the European winter, there's some concern that we may have some tightness. There are a couple of immediate reasons why that's taken place. Egypt, which is often expected is a sort of swing, sometimes it imports, sometimes it exports. It looks like it's going to keep importing. That's surprised some traders, and that's tightened the market. And Brazil has also drawn a lot of imports because it has weak hydropower. So you've got those two things in the shorter term. Long story short, there's still demand for Russian gas, so it's finding its way to market, especially through LNG. We've continued to see LNG go to Europe, and these shenanigans that you mentioned are evidence that people are finding ways to get that gas into the global market because the global market wants that gas.
Will, this is tangential to the remit in London, but I'm sorry, from sea to shining sea, it matters. Corn is cratering. It's under $4 a bushel. I don't know if that translates in London, but do we have a gloom within our soft study at Bloomberg News that corn could depress back under $3 a bushel down to $2? How fragile is corn and wheat in a boom year, a bumper crop year in America?
I think this is a trend globally that probably requires a little bit more attention. In the last few years, as after the invasion in Ukraine, and that obviously upended global wheat markets, people got very upset about the prospects for prices. I think that period in grain markets, and by that I mean wheat, corn, as you mentioned, soy, that appears to be broadly over. We are seeing some good harvests. We are seeing markets well supplied across those three main crops, and prices are lower and seem to be heading lower. So as we get into the time of year when people are looking at how much has been bought in, especially in Russia and North America, Yes, crop
Right.
markets appear weak, and I think obviously that's bad for the US farmers,
Right.
but it is another reason why commodities pressures into inflation are perhaps less than they have been.
I mean, years ago, Will Kennedy, Stuart Wallace, and Justin Kerrigan, they had me in a pub. They drank me under the table. And they promised me, they said, Tom, you got to go to the Bloomberg and look at a semi-log chart of inflation-adjusted corn. So I actually did once I got over my overhang. And Will Kennedy, it's amazing, back to the 70s, corn inflation-adjusted is $10 a bushel in today's dollars. And now it's just absolutely cratered.
Tom, do Will and the boys play that game when they're drinking their Guinness, where they have to take the first sip, and it has to be the level has to be below the crest and the top of the Guinness word? It's a big game out there. I know Will and his guys play that. And Will, am I wrong? Do you guys not do that out there at the end of every workday?
I think it's not something I've done for a while. I think I could still manage it, though.
at least since July. Will Kennedy, thank you so much. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.